Good morning, everyone, and welcome. I'd like to thank you all for joining us on what I think should be a national holiday, National College Football Signing Day. I know there are college football fans out there, but I thought it would be helpful to provide a bit of context on the topic today, which draws a correlation between consumer spending and the macro economy. The biggest thing that I want to get across is we're talking about consumer spending and the broader economy, and it's important to know just how important the consumer is to the broader economy. Of our roughly $17 trillion GDP, consumer spending represents about 2/3 of that. So you can get the order of magnitude of just how important we, the consumer, are. If you think about how much that dominates the economy, you understand why economists and investment bankers, why all of us spend so much time trying to figure out what consumers spend their money on, why they spend their money on that, and probably more importantly, what they're going to do in the future. There's a number of ways that we can try and track this. One of them is called the Consumer Confidence Index, which tracks the relative pessimism or optimism of the average consumer. Other things would be leading indicators like housing prices, stock market values, availability of consumer debt. The good news is all of these things have been relatively bullish throughout the second half of 2013 and continue to be in 2014. If we look at how that translated into actual retail sales at the cash register, it tends to agree. So if you look at the holiday sales for 2013, there was about $14 billion spent between Black Friday and Cyber Monday last year. That number continues to grow year over year. If you look at just Black Friday alone, interestingly, it was actually down this year. That's because retailers were helping us consumers get our fix of Christmas sales and opened on Thanksgiving. So if you look at the 2-day period year over year, it continues to grow. Other trends in retail include increased cyber sales, and it's not just on your laptop anymore. Sales on handheld devices were up 55% year over year for the holiday period. M&A, historical M&A in the consumer sector, it's been volatile. If we look at the first half of 2013, the actual number of transactions were down. Some of that's a result of transactions being pulled forward into 2012 due to pending tax changes. But I think more interestingly, values continue to rise. And I think what that's indicative of is a lack of quality deals in the marketplace. And so if you look at the companies that did trade in 2013, they tended to fetch pretty high multiples, indicative of a flight to quality. So what should we look forward to in 2014? GDP is expected to grow about 2.6% in Q1. That's largely indicative of consumers and businesses gaining more confidence. A bit of a recovery over in Europe, which will help our net exports. Interest rates, the Fed has said they're going to taper rates, but they've also in the same breath said they're going to keep short-term rates low, which is good for businesses. Housing prices continue to rise, but I think more importantly, the fundamentals of the housing industry are improving, and so there is, it's become less of a speculative market. Employment stabilized around 7% and should hover around that for the remainder of 2014. Healthcare, there's already a reference to this. Obamacare is either safe in the country because we're now covering a segment of the population that wasn't previously covered, or we're beginning a communist regime. Either way, I'm not going to touch it. Inflation should just be modest inflationary pressures for 2014, and short of any radical tax changes, I think what we'll experience is more robust real income growth. And so all of that is to say that it's a favorable economy for the consumer in 2014. So what does that mean for M&A, which is obviously important? Strategic buyers will continue to do what they've been doing. They're going to seek growth through acquisition. They're going to find ways to grow the top line with their record levels of cash that they have on their balance sheet. I think you'll also see a lot more cross-border transactions where you have companies in stagnant economies looking for growth in emerging markets. You'll also see mergers companies need to find ways to rationalize costs. They need to find that economy of scale to bolster profits and enhance their competitive position. Interestingly, there was a merger that got approved in November of last year between Office Depot and Office Max, and it was held up in antitrust for a while. And the reason it got approved was, the premise was that there's enough competition from online sales, which goes back to the point of the consumers increasingly going on the network. And then lastly, private equity groups, they closed 2015 with a record north of $1 trillion of dry powder. They will continue to put that money to work. And so while I firmly believe that predictions are very difficult to make, especially if they're about the future, I do think it's going to be a very healthy M&A environment for consumers and for consumer companies in 2014.